Looks like we're live.
We're live. Hey.
Live.
Hey.
Hey, greetings. So, my name is Francisco. I'm your moderator for tonight, wherever you are in the world. And here we got Simon from the Open Bank project and Heikki from API3. So, I will let you guys start with a little introduction. Maybe Heikki, would you like to start saying some words on API3?
Yeah, I guess it makes sense to introduce myself. So yeah, I'm Heikki Vänttinen. I'm one of the co-founders of API3. Originally from Finland, moved to Portugal just recently by the way of Germany. So yeah, currently in sunny Lisbon. I've been working in the blockchain space since about 2017, and more specifically in the sort of the Oracle subsection of the blockchain space since about 2018. And before API3, we had this API marketplace for smart contract developers that we were building called Honeycomb, which then taught us a lot about data providers and their needs when it comes to sort of this middleware for interfacing their APIs with blockchain-based applications that we applied into API3. And yeah, API3 is our current project for providing this API blockchain interfacing capability, this connectivity between off-chain data and on-chain applications. And by on-chain, I mean like blockchain-based applications, smart contract-based applications. Yeah, for the middleware, we have this Oracle node called the Air node, which kind of is different from a lot of the existing solutions in that it is meant to be operated by the data providers themselves. So instead of there being a so-called like an Oracle node operator, the data provider has the Oracle node operating as or running as a part of the existing API infrastructure, and it just basically provides the API with the functionality of or the ability to be called from an on-chain application, something that is kind of not the case. Like they don't have this inherent capability out of the box. So APIs need some sort of middleware, and for us, it's the Air node. And then once you have a lot of APIs being on-chain compatible, so running Air nodes, you can start pulling data from those multiple data sources onto the blockchain, and you can create these decentralized data feeds, what we call DAPIs. So essentially, it's a blockchain native API that pulls data from multiple off-chain data sources and aggregates it into a single value that can be used to execute a smart contract-based application, for example, in the realm of DeFi. And so yeah, and that's all governed by a decentralized autonomous organization. So a lot of sort of letters and decentralization here, but a DAO is basically a blockchain native organization that provides this governance capability in a decentralized way without sort of a centralized governor for these decentralized data feeds, that allows us to create these without there being like a central governor to them, which is usually a bit of a no-no in our space, like having a centralized party decide the parameters of an application, and so on. So I think that's enough for the intro. I think a lot of listeners might already know a little bit about us, but yeah, I guess I'll leave it at that for the intro to API3.
Thank you, Heikki. I love the decentralized and DAO because it reminds me to the transparency component, which was a key feature when Simon Redfern envisioned OBP. So maybe here, Simon, I'll pass the mic to you and let you explain a little bit about your passions about transparency and how that came to become what's now OBP.
Thanks, Francisco. I'll grab the virtual mic. Here we go. Thanks for arranging this, and Heikki, good to talk again. So actually it was in the mid-2000s, something like that, and I was seeing various BBC News program. So I'm living in Germany, been here for a long time, but I'm a Brit originally from London. And so, you know, the BBC, often my go-to source for news and blah, blah. So I saw these news programs about corruption and war and so on and so forth. And I just thought, well, it would be great to have more financial transparency, right? So corruption is kind of fed by lack of transparency and so on. And at the same time, I thought the access to my kind of online banking interface kind of sucked. And so I thought, well, you know, why can't we do just what lots of other players in the tech industry is doing, which was bringing APIs to their products and services. Yeah. So it's this combination of greater financial transparency, so it's a kind of societal aim, and definitely open source, you know, also to democratize, you know, the world of banking, give more and more choice to, you know, to new banks or non-banks or whoever wants to innovate in this field, and give choice to the customers and consumers at the bank, right? And also bring this technology and these transparency possibilities to a greater kind of, like, bring it nearer the surface of what's possible. Yeah. And so when I started talking about open banking, like officially, as it were, in 2010, I'd been mulling on these ideas for some years, actually. Yeah, I recently spoke to the mother of my children. She's like, Simon, you were talking about this in 2006, and then I talked to a mate of mine, Torsten, who I met in New Zealand, and actually he's one of the reasons I came to Berlin. He said, Simon, you were talking about that in New Zealand, you know, so that was pre-2004 or something like that. So, you know, sometimes these ideas take a long time, and actually we still have a long way to go with the transparency stuff. But, you know, as we know, like open banking is kind of spread around the world, right? You know, so I took the ideas to the UK Treasury in 2013, 14, something like that, after being incubated at the ODI, Open Data Institute, you know, with Sir Tim Berners-Lee, founder of the internet, as one of the founders of that institute. Yeah. And, you know, and then in parallel, we've got PSD2 from the European Union, right, who are pushing as regulators to get more choice and competition and so on. And so, but by now, open banking has really spread around the world, you know, like Brazil is even bringing in, not even, but I just heard, that's the latest one I heard about. So Brazil is bringing open banking. Mexico, you know, is on the way. You know, obviously in Europe, UK, and in many other jurisdictions, we've just rolled out a deployment in Georgia. You know, so open banking is happening, and I'm fascinated and really excited about this collaboration with kind of little collaboration with API3 and the blockchain stuff. You know,
So it'd be kind of fair to say that you sort of started this whole open banking thing.
I think it would. Yeah, it would. Yeah. I mean, obviously, all of us, we're building on the shoulders of giants, right? So, sure. You know, HTTP existed, REST as a framework existed, OAuth and JSON, they existed. And my point was, you know, bring OAuth, REST, JSON, and open source, right? I think that's like super important. And I think, you know, the standards, the successful standards are all like open source, right? And like that kind of thing. Yeah.
Fantastic vision, Simon. Would you have imagined that idea of transparency one day would come here with something that goes, in a sense, not against transparency, but completely encrypted, like the blockchain is? You know, like HTTP. And you got now ERC20 standards, and how we're both through this collaboration merging the two types of standards.
Yeah, so that's really exciting for me. And actually, I think I mentioned this the other day, Francisco. So when you told me about this possible partnership between API3 and Open Bank Project, you showed me this some transactions basically, on this thing called Etherscan, and there you can see the details and you can dive deeper and everything. And for those that don't know that much about the blockchain, right, all these transactions are transparent in a sense, right? That you have the transaction IDs and so on. What you might not have is any kind of link to something in the real world from to an account ID or a person, a legal entity name, or so on and so forth. But it's all there for the taking. For those that want to be transparent, they can just publicize these addresses, and I think that's really, really fascinating. And also the DAO, this decentralized autonomous organization, that I learned about, I don't know, a month ago or something. That's really great, like this fact that you can make decisions, and it's transparent, and it's kind of immutable, I guess, right? And it happens, and it's all online. Like we had a meeting with the two teams the other day, and we had God knows how many countries we had mentioned, represented, and backgrounds and nationalities, like a truly kind of global team. And that's exciting. And
on the topic of like the transparency of the blockchains, I think it's really interesting in the sense that you have the accounts sort of transparent to everyone and public, and then you have this sort of pseudonymous sort of naming convention, in the sense that you have the strings of letters and numbers as the Ethereum address, but then you also have like Ethereum name service, which allows you to also like put a name to the address, so to speak. So you could actually just use your own domain. So for you, it could be simon.eth as the address to which you receive these funds. So in that way, you could be publishing that this address belongs to me, and that's what a lot of people are actually doing these days as well, kind of claiming their own domain in this sort of Web3 space.
Yeah, interesting.
Yeah, and obviously the DAO is like in the context of a DAO, you could do that with the DAO members. So every member could have their own domain, and it would be public that this person is voting on this topic. Obviously, you could just have this sort of pairing between the participants and these pseudonymous addresses, but like it just provides this more direct link between person and on-chain identity. But then, like in the context of open banking, I think it's interesting to think about how we're going to be merging these two worlds, where you have like absolute transparency, and then this other one where you have data siloed at banks and regulations and like very like high privacy requirements. So like that, I think that's a lot of the stuff that we're looking to explore here and work out.
Well put, Heikki. Maybe also, can you expand a bit on why do you think the timing is right? And from your perspective, coming from the Web 3.0, why having these data sharing mechanisms of financial data something considered innovative for the Web 3.0 space?
Yeah, I think like there are a few aspects of this. Like there is the space itself growing towards things like DeFi, for example. Like the blockchain space has been growing in the past couple of years. Like DeFi wasn't even a thing maybe 3 years ago, and now it's just this multi-billion-dollar kind of financial universe where you have applications and where you have like a lot of the same things that exist in the traditional finance sphere, but that exist on chain in a sort of deterministic programmatic fashion, without any sort of centralized actors maintaining it, and it all relies on the blockchain to kind of provide the sort of the trust between the actors, which is kind of paramount to being able to do anything. So DeFi has grown by a huge margin, and then also at the same time you've had, like from our perspective, the time right now is good for bridging this type of data to that DeFi realm, because we have our AirNode solution is pretty uniquely capable for doing this in a way that maintains the control of the API with the data provider. So like I said, like a lot of the existing solutions rely on these third-party node operators, at which point you run into a lot of sort of regulatory issues where you're exposing the data to third parties, and like this certainly has relevance, like this conversation, to the discussion around public networks and maybe like private networks or permission networks, which is sort of this I guess split within the blockchain space. But with the AirNode, what you can do is basically have the data provider run the middleware that's required to connect their data to a blockchain application themselves without exposing it to a third-party middleman, and that allows you to have this sort of truly two-sided communication between an organization off-chain and an application on-chain that needs data from that organization. So the banks can use existing blockchain APIs to have visibility to the chain, but for applications on the chain to execute any useful function based on data off-chain, they need also this communication the other way around, where they can like call an API from an on-chain application, and for that, our solution is what we've built is the AirNode solution. So hopefully that answers sort of the technical side. But again, like I think just data availability is quite important in facilitating this innovation, in that like we saw what happened with the DeFi space. It mainly grew out of data availability. Like there were these projects like Chainlink, for example, that made price reference data available for decentralized application developers, and then they took that data and created a lot of financial applications that consumed that data and did useful things like provided loans, and for those loans you need a liquidation function, so it needs to be able to query a price of an asset and so on. And then you saw this huge boom in DeFi where in the beginning it was to a large part facilitated by just making data available. Now with like open banking data and banking data in general, I think we have the chance to kind of facilitate that same type of boom, but in the specific context of this type of data and what it can enable.
Fantastic, Heikki. And what about you, Simon? What's your thoughts of this interconnectivity between on-chain and off-chain data would bring to the current state of open banking as we know it, or open finance, if you will?
Yeah, so I think it's going to be like a win-win situation for both on-chain and off-chain. I mean, there always has to be two parties to win here, right? In a sense, yeah. And I think the idea of oracles is really interesting because obviously, like not obviously, but yeah, the smart contracts and so on, they are in a way you can maybe think of them as a bit of a kind of financial operating system, something like that. So they're kind of embedded in the network, they're distributed, they're all around, and they're doing stuff autonomously, and there's kind of hopefully no single point of failure and so on, right? But they need these kind of trusted data sources, and I guess that's where one place where banks can come in, yeah, because they can even if if you think about it like a normal operating system, you've definitely got sources of truth within that operating system. You've got a file system which has got data there, right? And it's kind of trusted and so on and so forth. And in a sense, the operating system is querying those sources of data, those files or databases and so on. And so banks can be a bit like that, I think. They've one of the things that they have maintained over the years is, and obviously they've spent a huge amount of money and effort in it is their kind of reputational standing, in terms of security, and they might have failed in some other areas, but in terms of their kind of data security, they've done pretty well, and so they can be seen as trusted oracles, and not just for data, I think, but for also potentially authentication services as well, right? So if you want to know who someone really is on the blockchain, why not use some banks' authentication APIs as well? There's a possibility.
I think I was going to say, like, just also the sort of the interface value of a bank to the usual sort of retail customer. Like, if we want to make DeFi reach the masses, so to speak, then the masses already have this financial interface that they use, which is the bank and their online banking solutions. And so that can be on the back end connected to these systems like DeFi if you just provide that sort of connectivity and the ability to communicate. So I think banking in that sense also has, and that interface captures a lot of data that you can use then in these sort of on-chain functions as something to execute some sort of DeFi contract with. But I think like that interface value has some substance as well.
Yeah, and I guess so that's kind of from the on-chain kind of advantage, in a sense, like wanting to access this data and potentially authentication services and so on, and then from a kind of customer perspective, right? I mean, just like open banking was, in part driven by customers wanting to have access to their data, so. It might not be in an iPhone or Android app this time, or web app, but it might be in a blockchain app, and they just, it's their data in a sense, they want it. And, this was actually, a large part of PSD2, right? It's the customer's data, let them have it wherever they want it. Yeah. And, I mean, yeah. So that's for instance, in Australia, the regulation is actually much broader than just open banking, right? It's like consumer data. Yeah. So, why not get it on the blockchain as well? And then from a kind of bank's perspective, I think they've got an opportunity to monetize data. But not potentially not just the open banking data, but lots of other data as well, right? So banks are holding huge amounts of data. Not all of it is customer related, right? And it might be market related, risk related, know your customer related, all sorts. Yeah, and they could want to monetize this onto the blockchain. And I guess there's a huge amount of innovation happening in the on-chain space, right? So banks should want to be interacting with those guys and gals. Yeah.
Exactly, especially because it was once thought that these blockchain apps were gonna disintermediate all the common financial services, and I think it's clear that for the end consumer to be better off, these two kind of need to come together, and regulators need to come and say, like, hey, these are the proper frameworks for the Web3 and the Web 2.0 to coexist. But for that, I think there has to be certain considerations when it comes to data sensitivity on networks, because being on a public blockchain on, let's say, Ethereum, for example, then data, whether it's just transaction type, can be accessed by various actors. And we all know, at least you and I, Simon, coming from the open banking space, how jealous or protective banks are with the proper person being in front of the proper data. So perhaps a question to both of you. through this partnership, how are you planning to address this situation to avoid any breaches or liabilities to when making open banking data available to the Web 3.0?
Heikki?
Yeah, sure. Yeah, sure. I mean, there are sort of various ways to tackle this. I think the main way that enterprises have sort of integrated their systems to blockchain without exposing all of the data to like all of the network participants is, or actually that's not the right way to say it, but basically they've utilized these so-called enterprise blockchain solutions. So they're still exposing the data to the whole network, but the whole network is permissioned in terms of the participants. So they would be only interfacing with or sharing this database, so to speak, with like a very controlled group of participants, and this could be useful for banks to like interface with each other, share data between each other, and also some authenticated fintech startups, for example. So you could actually sort of, I guess, perpetuate the open banking vision or the PSD2 vision on the blockchain, and use that as sort of like a control platform for this data, where everyone has this sort of base truth in the form of this sort of common database, and that access to that database is permissioned, or I guess that kind of data sharing environment, not necessarily a database, because it can be very inefficient to create a sort of a broad database on a blockchain. But so like that's one way to limit the exposure of data. There are other solutions as well, like zero knowledge proofs that are being explored in like providing this data interconnectivity between the on-chain and the off-chain without exposing any like private data in its raw form. And you can do all kinds of things here. I think like to an extent it's up to us to explore what the different requirements are for different use cases. And I think like the breadth of use cases that get enabled here is sufficient to like require a sort of kind of various different approaches to this question of privacy.
Yeah, I think that's right, Heikki. There's going to be different use cases, different data types. So I don't mean string and integer, but I mean like whether it's customer-based data, whether it's bank-based data, whether it's almost public data, and each data set will require different handling. Yeah. So I guess one thing you can do is you can also encrypt the data, right, so that it can only be read by the intended consumer. So it can't be read by everyone on the blockchain. Yet it's also signed by the bank, so you can compare the signature of the like the wrapper around the information, or the like the hash of the information, so that it's good, and yet it's encrypted as well. Yeah. So, and I guess that's one of the things we're going to address in our tech sprints, right?
Yeah, certainly. I mean, it's super exciting to know like what or to see what kind of solutions come out of that. And I think this privacy topic is pretty timely right now. I think like there's a lot of development and or certainly like a lot of focus in figuring this out. I feel like it's one of the main sort of challenges for our space, alongside things like scalability, for example, like just the cost of transactions that we're trying to get right. And also like there may be like a requirement for privacy even in the application. So if you have a DeFi application that requires some sort of off-chain collateral, for example, and you need to prove that you have a certain amount of collateral locked in off-chain, then even in that case, is it acceptable for there to be a function that calls whether you have $500,000 locked in some sort of an off-chain contract, and that to be a yes/no function? So it doesn't necessarily need to provide like a raw value that would be,
It just in fact there are APIs in open banking for that, right? Like check available funds thing. It just 500,000, yes, no. And,
so you're relaying sort of like a binary answer of does this function execute or not?
Right.
But even in doing so, like if the application knows what it's querying, or everyone knows what the application is querying, then they get that information handed to them. Is that this bank account had over 500K? But that's some of these questions.
So going back to the tech sprints that you mentioned, Simon. So what would you say you would love to come to see to life out of these tech sprints, or you too, Heikki? What are some expectations, and who's invited to participate? Who would be your main target audience? And do you see perhaps more innovations coming through the DApp space, or you think some more innovations will come to the banking sector? Or it will come from the regulator sides, that they will have a chance to get some involvement. So how do you see this coming through in the plan that you have created? Maybe just for the audience here to know what's next, what's in line.
Well, maybe I speak to it in general, right? As we've organized many hackathons over the years, and I think the beauty is always that you're surprised. You never know quite what's going to come out of such an event, and I think like a strong kind of design like element in the events is that like everyone's a winner in a sense, so that we make sure that like the people that come, they get something out of it, whether it's mentoring or feedback or meeting future collaborators, or using new technology, and and just having fun as well, right? This is an important part of hacking together, and so on and so forth. Heikki, you got any thoughts?
I think like just the collaboration is like immensely valuable. I think it would be great to have a lot of the people building in the DeFi space, for example, join and see like what this type of data could enable them to do. But at the same time, like they look at the solutions through a certain type of lens. So it might also, be valuable to like have them interact with developers from the fintech space in the Web 2.0 sense, like not blockchain based, and maybe that can merge into something that we didn't really even think about, and at the same time the regulators, I feel like it provides a lot of value for them to just see the type of innovation that's happening. And at the end of the day, like the regulations need to sort of follow the reality to some extent and optimize for the reality that we want to see in the future. And so I think a lot of the development that's going to come out of this is also going to like influence the sort of regulation that takes place in the future. And that's always kind of a sensitive topic in the Web 3.0 space, because we want everything to be deterministic and programmatic, and for there to not be any of these sort of soft meat space rules. Everything is sort of determined by code, right? But then, like once you start bridging these two environments, like the sort of the meat space finance and the blockchain finance, which works in
meat space finance. That's a funny phrase. I've not heard that before.
Yeah, well, I mean, like you have meat space law, and then you have blockchain law, and blockchain law is thoroughly deterministic. Then I guess you can make the same sort of allegory for the finance side. But I think like I guess to make it short, I think it's just very interesting to see what comes out of the sort of the mesh and merge of these individual actors. And to our like from our perspective, the point here is to just enable innovation. Like there are these sort of technical and sometimes regulatory barriers to innovation, and then you try to sort of break down those barriers so that you enable new innovation. And like for us, the specific like task of breaking down barriers has to do with providing this sort of communication between traditional finance and decentralized finance and the blockchain space as a whole. I think like it doesn't also like make sense to just limit it to DeFi. There are a lot of valuable concepts that are peripheral to DeFi and so on, but like self-sovereign identities, and banks could be used as validators to validate people's identities, and people could own their own identity on the blockchain and use that. And coming from Finland, I like that's super popular already. Is that people use their banking identities to validate their identity for all kinds of applications. So you use your online banking ID, but this could actually be a blockchain native ID that is just validated by the banks, and so it's not sort of in the bank's data silo. It's its own thing that exists.
Yeah, they add some quorum to it, as it were. Like
yeah. So all these kinds of things might emerge in one way or another from the tech sprints, and that's what makes them so exciting to see. I think like it gets me very excited to imagine like all these use cases, and then to see them in real life. I think is going to be great.
Yeah, and we never know who's going to show up to hackathons, right, or tech sprints or so. So, you know, like we've done them for various banks, and then you get other people from other banks showing up and, you know, just joining in and, you know, having fun. And definitely the regulators, I think, you know, might be interested. You might not know that they're a regulator, you know, and up front or so, but yeah, I think it's an interesting collision of these two worlds and different people from different backgrounds coming with ideas.
Yeah, and it's sometimes where the innovation emerges can be kind of I guess, you know, our intuitions can fail to an extent. So it's always kind of exciting when your intuition does fail. And when someone comes up with something that you certainly like weren't able to even imagine before seeing it. So
yeah, cool,
fantastic. So now I think the spirit of innovation is high between us and from both companies, right? And now there's this topic that I want to bring to the table, and that's CBDCs, central banks, digital currencies. If you had to guess, where would you see this coming through? Would you see this coming through perhaps a private database from central banks, or being issued on a public blockchain with an enterprise version?
Hickey?
So central bank digital currencies, I think, it's an interesting topic in general, like in the context of finance going on the blockchain, and then if the currency becomes native to the blockchain, you certainly probably don't need as many on-ramps and off-ramps, and the issuance of the currency can be done on the blockchain. So it's just I think like at that point it becomes to an extent a competition between monetary policies, and it puts currencies like Ethereum and Bitcoin on sort of the same standing as sort of these sovereign currencies of nation states. So I like that. That's I guess an interesting topic of conversation for the long term, is that like if it kind of allows us to explore the differences between different monetary policies and in a way where they're on the same ground, so to speak, and like if if fiat currencies are the best way to go, or if you want something that is more determined in its supply, like Bitcoin. And then, yeah, I think just like connecting those currencies to DeFi for the average person when the currency exists on the blockchain to begin with, like it'll just become that much easier to interface with these types of novel financial applications. And like obviously that's great for our space, but that's probably also great for everyone, because you get a lot of the sort of the blockchain based efficiency from these permissionless programmatic functions. And when you have sort of the trust function kind of handled by the blockchain, it takes a lot of friction away from the financial system and enables us to do value transfer in a much more frictionless way. And that should be great for everyone. Obviously, like a more efficient financial system just allocates funds and value in a more efficient way, and like allows the economy to grow.
I got a question, if I may. So, I mean, maybe it's an obvious answer, but what's the difference really between a US dollar coin, for instance, and US central bank coin? I mean, one is like literally controlled by the US government, and one is controlled by what? I mean, if they're both pegged to the dollar or so, what are the differences going to be?
Yeah, I guess my main point was that you wouldn't necessarily like need an oracle if the central bank handled its issuance on the blockchain, right? It just emitted tokens out of thin air like it does currently in sort of outside of the blockchain. And so the current stable coins, as we call them, like they require some sort of oracle to keep the price of the on-chain asset and the off-chain asset equal. Pegged. Exactly. Yeah. So there are kind of various ways to create that peg, but for the most part, they all require some sort of oracle that draws the value from the outside.
But are there any other differences between those two things?
Between stable coins and potentially like central bank issued digital currency. I would say probably. Difficult to give a short answer. Sure, some of our community members could.
Yeah, maybe that's something we can explore during the tech sprints, right?
Right.
Because we can also do like, conceptual explorations, even philosophical explorations,
Those are interesting. Like what is the difference between Tether and US central bank issued US dollars? Does Tether become its own sort of mini central bank, or
that sort of thing?
Definitely a hot topic, and one that's really, in my opinion, bound to shape the future of financial services, and how we as consumers have our buying choices and execute them.
I mean, like maybe that's when actual blockchain or cryptocurrency payments become kind of more ubiquitous, when you can actually use that digital currency to pay at the local coffee shop or at the grocery store. Like right now, there's always the difficulty of transferring crypto assets to fiat currency to make payments. But if everything is on the same platform, then it's much more straightforward.
And I think here the banks are gonna come very instrumental, if you will, because when a central bank is issuing currencies directly to the consumer, the ones at risk are at the banks. So they're gonna have to find the proper framework for this to or work together, or the bank be the intermediary between the central bank and the ultimate consumer. But that's just food for thought on my end. perhaps as right now, I would like to explore a topic when it comes to efficiency and efficacy. It's about what, in your opinion, Heikki, does the open banking data represent for DeFi? Perhaps if I'm a little bit more specific when it comes to collateral, what
Right.
data could you use as collateral to get an alternative source of finance?
Right. Well, I mean, like the sort of the obvious answer is that you could use crypto assets to collateralize sort of off-chain loans, or you could do vice versa. You could use potentially if you had this sort of if the bank took it upon themselves to like do this, you could use off-chain collateral to take loans in cryptocurrency.
Like mortgage information or something like that.
Right. But yeah, exactly. So it could just be fiat balances, but it could also be other asset types.
Shares or
like basically kind
property,
of anything.
real estate.
Any type of asset. Like, I think we discussed this earlier today. Some things that were mentioned, I think, were like trade finance receivables and invoices with like short-term maturity. So it could go all the way to something like that, but it's very much about kind of creating that ability and then having this incremental process of creating more diverse and complicated financial systems and ways to arrange these types of like financial solutions.
Thanks, Heikki. Thanks. That's super exciting. And perhaps on the open banking side, one last question and I want to touch, maybe for you, Simon, is this whole concept of the APIs. It's very new, right? And perhaps pioneered by yours truly here. But would you think that it would make sense in the long term that we will see all regulated open banking regimes, all the standards into one DAPI?
That's a interesting question. I mean, if we talk about the different kind of open banking standards around the world, right? There are quite a lot of overlaps, but also differences, right? So PSD2 is really focused purely on like the customer's data and making payments, whereas in UK, for instance, you have more kind of bank level data, even things like ATMs and branch locations and services, but also some other things which would be potentially useful to the blockchain, like financial products and so on. Yeah. So I think we probably don't need to expose all those APIs at one time. Yeah, because there would be lots of overlap. Actually, Open Bank project kind of does that a bit out of the box. It exposes these different, but I would call them almost spellings, right? So some of them have bigger sets of data and different sets of data, but some of them are spelling changes. Yeah, one of the important things is they have different authentication flows and requirements. So some are consent based, some are with OAuth, some require like JWS signing, some don't, some so there's like differences. So I think in the tech sprints we're going to do with API3 and passing this data to the air nodes, that's one of the things that we're going to look at, is the kind of authentication schemes and so on.
I think one thing we sort of discussed before as well was kind of the idea of creating DAPIs around things like credit scoring, for example, like pulling credit, because there are hundreds of organizations that produce credit data in any given sort of country. And the DAPI is in its core just like an aggregation function. So the blockchain basically creates this permissionless, again, like kind of base truth layer that is not owned by any of these organizations. Kind of like consider it as like a fully distributed immutable spreadsheet. That just allows you to kind of then what you can do is pull data from all these organizations, credit data, for example, and then aggregate that into a single value that could represent, for example, a person's credit score. And you could do that between like a highly distributed network of organizations that just use the Air node as the sort of middleware that allows their legacy sort of systems and APIs to interface with this sort of base truth. And since it's not owned by anyone, it's quite trustless and immutable, and it has a lot of those really kind of blockchain native beneficial characteristics that people are exploring this technology for in the first place.
And just to follow up on the question a little bit more, so I think we'll see lots of data which doesn't currently fall in the open banking or even open finance space, right? So my view of open banking was always much broader than the eventual kind of regulated thing. So maybe that's kind of open finance. But for instance, you could even open current accounts and stuff like that, couldn't you, via the blockchain, which is kind of, that's not really an Oracle type thing. That's the other way, but you could do that, and there will be lots of other data that's available, I think.
Yeah, because banks are, at the end of the day, like they're just like huge data silos, and
yeah. And truth is power, right? Truth is power.
Yeah,
something like that.
Right. Well, I think we should pass the mic to the community. If there's any questions, we're happy to answer them right now. Otherwise, Simon, Heikki, this has been a fantastic discussion, hearing you both, and I really look forward to these 4 tech sprints. And I think to the community, the Open Bank project is new to the blockchain space, but not in thought. Simon always had his blockchain thoughts, but he was too busy.
Well, actually, it goes further than that. So we did hackathons for Ulster Bank and RBS in UK, like I think 2014, 15 or so, and we actually gave Bitcoin away to the developers that showed up early on the Sunday. So and we had some blockchain and apps then developed. So yeah, it's cool.
Yeah, all of those developers are super rich now.
Yeah, exactly. yeah. Remember me, right?
The original hodlers.
Yeah, I don't forget you.
Yeah, let's hope so, at least.
Well, I mean, I don't expect they got rich from the fractions of Bitcoin that we gave, but if they got into it in some way, right, then that's a cool thing. That was your. We also had at one of those hackathons, we had bagpipe lessons, right? So you could get Bitcoins or bagpipe lessons or both, and yeah. So I'm not sure which was more useful, actually.
It depends on your preferences, I guess.
Yeah, exactly.
I'll take the Bitcoin.
Yeah, so there's a question about open insurance. So what about open insurance in banks? API3 DAO is all about being an insurance for the data provider. It would be helpful to be able to access insurance.
I mean,
go ahead.
Okay, I go. Yeah, so actually we're getting into this topic a bit. So maybe we can give some more information later on, but it's something that's interesting to us, I would say. Yeah, these open insurance APIs.
Yeah. The way that insurance works in the context of API3 is basically that we provide the sort of quantified security through the application of insurance to these data feeds. So if there are any malfunctions that lead to any losses incurred by the data consumer, so these could be, you know, DeFi applications or applications of any type on the blockchain that use the feed, then those can be reimbursed from the insurance pool, and that's basically the functionality I think Ferdy is alluding to here. So yeah, I think like
or is he also thinking about like insurance products or something like that, or
yeah, probably.
like
I'm mainly referring to the sort of the second sentence there, like API3 DAO being all about insurance
Okay.
for data provided. But
Yeah.
yeah, I think like it's certainly like an important part of what we do, being able to quantify the security, because at the end of the day, you're working in a sort of a trustless distributed environment. So there's really no one to sue if something goes wrong, and then creating something of a sort of a deterministic, as much as it can be, an insurance feature is highly required. And certainly like in the concept of APIs, you have service level agreements, but usually those service level agreements are not quite suitable for Web3 use. So when it comes to Web3, the data availability and correctness is very important, not so much like how many calls can you make in a given hour, which is more important to Web2 applications. So we kind of intend to bridge that gap by using insurance as the bridge. So kind of an extended SLA type of approach.
Insurance from the community, right, Heikki?
Yeah, exactly. So if you take part in the governance of the DAO, you're incentivized to keep the data feeds running as they're supposed to be running. So that if there's a malfunction, you're sort of directly liable for at least a portion of those lost funds. But yeah, that's basically sort of the function between the DAO members and the insurance pool.
So I guess this question goes back to making sure that APIs by banks will be up and running and they will not fail. Would you say?
Yeah, I mean, like to an extent, or to the extent that these APIs are to be used in financial applications on the blockchain, I think some sort of application of insurance is probably needed. And like this applies not only, I think like this is something that we're going to be talking about more in the future, but this applies not only to the APIs, but also just individual Airnode enabled APIs. And sometimes the data that's coming from a bank is not like highly decentralizable, but you still want it to be correct. And if that data is not correct, then it can lead to lost funds in the event of sort of an API or data feed malfunction. So it's not that insurance only applies to the APIs; it also applies to individual APIs that are Airnode enabled and used in a financial setting. Obviously, the sort of the insurance rates might differ quite a bit, but yeah, yeah. But I think like open insurance as a concept is broader than this. But I guess you could, to an extent, consider what we're doing to be some sort of open insurance, certainly decentralized insurance.
On our side of the coin, we have perhaps another takeaway for open insurance, which is kind of like the same journey that banks are going through in exposing their data. Insurances are also doing that, their data and services.
Yeah.
So yeah, just a good point to touch base on you know the underlying connotations of both topics and where they each
and we have a, well, we can't announce it yet, but we have a project in that space to do with bringing open insurance to insurance companies like open banking, you know, so off chain, obviously.
Cool deal. So we're nearing the hour. I guess there's no more questions from the community.
How do people get in touch about the tech sprint, Francisco? Do we have where can people go for that?
They have on our website on the blockchain banking services tab. They can register for the tech sprint, and also on the API3 website I guess the community can also sign up for the tech sprints.
On openbankproject.com, did you mean?
Yeah, Open Bank Project under our services tab, and
Okay.
on API3 website.
Yeah,
Okay.
it's in the bottom menu. It also can be found by just typing in api3.org/openbanking. So that's where you can sign up for one of these events.
Okay, cool. Great.
Fantastic.
We'll have to tweet that as well.
Yeah.
All right, follow-up tweet.
Yeah, follow-up tweet. Yeah, or openbankproject.com/something or other. You'll find it.
Blockchain banking.
All right, good.
Cool.
So
Well,
thanks, Francisco, for
thank you,
the
guys.
moderation. Yeah.
Wonderful talk for sure.
Thanks, Francisco, for moderating. Thanks, Simon.
Yeah, thanks, Loki.
Anytime.
Thank
Thank
you.
you. Bye-bye.
Have a good one.
Ciao. Bye.